Now we're into chapter 3, which deals with a sheet called assumptions. Assumptions are the basic data input that you need to correlate with the other sheets of your spreadsheet. As you can see, there are 9 sheets that have been created in order to make the 5-year model here. The assumptions page, or the sheet, is the second one from the left. Here I show a page of the assumption sheet that includes data or macroeconomic factors. Essentially, you can put anything you really want in there that becomes a factor in controlling the volume of numbers. They're discrete information. In this case, you also see international locations because this company had to have operations in other parts of the world. Therefore, you have to take into account currency fluctuation, inflation, etc. You also have to include the tax rate in the United States versus for corporate, for individual, and also tax rates that you'd be able to expose yourself within outside of the United States. Essentially, you can also put in data that relates to individual employees. There are important factors, let's say buying them a computer, or what would be a desk, what I call incremental cost analysis. In any event, this sheet has important factors you can change over time and makes it easier because this data can go penetrate the other sheets of your spreadsheet of your model. As you can see, I highlighted some of the items or categories within the assumptions page. But look at the first one. I call it about the component deflation. Why was that important? Because the magnetic medium being used for this device actually reduced over time, over every year. As everybody knows, storage space in magnetic medium has been dropping year by year. In this case, I calculated 42%. Why is that important? Because it reduces the cost of pricing for us to purchase that item and also improves the margins when we make the product. The other categories you'll see are macroeconomics, in which I identify the different countries in which we are seeking to do operations. And it's important for us to know what's going to happen when we get there the next 2 to 5 years. The next category we talk about is the sales management and what does it involve. The other important information is IS incremental cost. What does it take to set up an office, or what does it take to set up a desk? All these are incremental items that will impact the bottom line over time, either 1 year, second or third year as you expand. The more employees you add, the more hardware you require. That is cell phones, computers, desks, etc. Then you have other information here regarding compensation for salespeople. What are the standard percentages that you require to calculate? Finally, we also put in some data here called tax rate. Even though it's currently blank, but we know they can waver between 20 to 25%. So when you come to the bottom line, EBITDA, earnings before interest, depreciation, and taxes, you do in the long run want to know what is your net income. And in order to determine that, you have to take away the taxes. Finally, there was a category put in here regarding percentage of sales, percentage of whatever it is with the standard in the industry. We had to hit those targets in order to be within the standard in the industry, so that whenever an investor was looking at the numbers would understand that we actually are following standard industry criteria.